Congratulations to everybody that said rule number 4, price moves in a wave, from yesterday's video. Now, what exactly does this mean? Price is always moving up, then down, and also goes the other way, down, then up, down, then up. Typically, people think that price is either going down or it's coming up and it goes in a straight line. This is in fact incorrect. And with the CTKS method, we take advantage of that price volatility. It doesn't matter to us if price is going up, down, or staying the same. We know where the guide rails are inside the markets. We know how to take small percentages which add up to huge percentages over time. And it doesn't matter which direction price is heading. In this video, we're going to look through the cheat sheet, and the cheat sheet is an incredible resource. You can download the free cheat sheet from ctksmethod.org. Just scroll down on the page until you come to Mastering Price Action. There's the free download right there. We're going to cover it today from an advanced perspective. That perspective is the Profiting from CTKS Method Structure course. Specifically, I'm going to show you how to take advantage of all of the knowledge inside this particular course, and there's a lot of knowledge that you'll need to know to be profitable inside financial markets. Let's run the numbers. Hi everyone, I'm Ken from CryptoTradingKS and the CTKS method. If you're new, a very warm welcome, and welcome back CTKS family. We can see that when we look at the tickers of the service, the VIX has been coming up in the past 24 hours. Inside the Profiting course, I talk about row 1 and row 2 as basically the bus drivers of risk. They're all vying for the steering wheel, and the VIX has unequivocal control of the markets at the current time. Now, what does this realistically mean? If the VIX is coming up, we expect negative price momentum on the major market indices and also across the futures, as well as individual stocks and the crypto market itself. And you may say, but Ken, these are actually coming up, whereas, yeah, you're right, the other ones were coming down. But why are these coming up? The thing to remember is the crypto market trades 24/7 by 365. That means it's always open, and the stock markets aren't, and that's a really important thing to consider. We're also seeing Total 2, Total 3, and others coming down at the current time. When you've gone through the Profiting course, you'll understand this sheet and in a level that other people simply won't be able to fathom. And we can see the row 1 references. They're pretty strong, and this is indicating that the VIX is spiking up, and we can see that when we look at this chart. The VIX has been basing, did a bit of a fake out, and now it's coming up. Now, is it going to retest this specific level and back down, or is it going to go up? That's the major thing that you need to look at in the next 24 hours. And that is the purpose of the cheat sheet. The Profiting course has a lot of different templates to keep your timing incredibly sharp and help to explain intercorrelation, interconnection, and so many different things. What we're looking at here is the inverse VIX futures. That's that red line. You can see it stopped. But Bitcoin is still going, and Bitcoin has just arced up in a big way. I'm going to show you, if you were reading the cheat sheet, you already had a distinct possibility of this occurring. There are technical reasons for this kick up. Now, what does this mean? The inverse VIX is following just normal Bitcoin. Now, what does that mean? So basically, when the VIX comes up, you expect Bitcoin to fall. Gaining an insight into intercorrelation and interconnection is really, really important. That was row 1 of the cheat sheet. Now we're going to look at row 2, which is junk, euro, Aussie dollar, gold, silver, and copper. And we can see things are going a little bit ballistic, but there are actual reasons for this, and I'll come to that later. You can see that junk bonds is following the directional correlation of Bitcoin. And junk bonds stop trading. Bitcoin is keeping going because it's a 24/7 by 365. It never ever sleeps, and it's highly liquid. we can see gold had a bit of a kick up on geopolitical tension and stress, and it's come down recently. Typically what we see, and it's something that I was mentioning in yesterday's video, if you see gold go up, expect the VIX to go up. But if you see gold come down, expect the VIX to be coming down. And remember, the VIX is in control. It is not always in control, and that's something to bear in mind. But one thing that we've seen throughout time, the Aussie dollar does an incredible job of predicting where Bitcoin is going. Now that is fantastic. Thank you, Aussies. The Profiting course takes you step by step on how to read charts, how to read structure, how to understand intercorrelation, interconnection, and so many other things. It is literally the thing that puts all the pieces of the jigsaw back together, because financial markets are really tough to decipher. It takes many, many decades to do so. And the thing to always note, Bitcoin, when it comes up, it will pull the entire crypto market up with it. Total and Bitcoin are intercorrelated and interconnected. So if your money chart, for example, was Pepe, and Pepe has been known to pay, you must keep an eye on so many things. This is just not taught to retail. Retail is about hopes and dreams and Ferraris and all that kind of absolute BS. But it's not about skill. Before I mentioned that this potential move was on the cards, and you could take advantage of it if you were awake at that time, and not everybody is awake. Not everybody sees the same data inside the cheat sheet as you would if you're awake now. In Europe, people are going to bed. And some people have already clocked out for the night, so it realistically depends on when you look at things. When we look a little bit more deeply into row 1, which is of course the VIX, the US dollar currency index, or the DXY or DXY, dollar yen, 10-year, 2-year, and oil. What we see, and it's a very important thing to note, when the VIX is coming up, Bitcoin is coming down. Now don't forget, Bitcoin and the major market indexes are all hanging together, because that's exactly what the VIX is trying to tell you. When it pops up, it's saying if you're invested in the stock market, get prepared for pain. Or if you're like Purpuratum, get prepared for exceptional advantages, and we should be like Purpuratum. And on that note, if you have a 10-5-10 fund, please pop in 10-5-10 into the comments. You are a legend. Now let's check out what was happening with the VIX. When we look at the VIX, it was just basing recently, so it found a degree of support inside the market. Now, when it finds support, structural support, we anticipate it will find that support and rally up into resistance, and that's exactly what's been happening. This rallying into resistance is the first reason that we would anticipate the VIX futures to come down. Also, the VIX futures did a really sharp move up recently, and that is always a move that requires digestion. As we go into row 2 of the cheat sheet, which is junk bonds, the euro, the Aussie, gold, silver, and copper, we're covering off stocks, commodities, crypto, and so much more. We can see one thing, that junk bonds had a sell-off and started to rally. It hit that overhead structural resistance and backed off. At the same time, the VIX was hitting overhead structural resistance. We know the price is always moving in a wave. So when you get a retracement from a structural level, that typically means that we're going to find a level of support and bounce. And we're at a good area in terms of junk bonds at the current time. A lot of people do not know where the structure is inside the market, so we must look through two lenses, a structural awareness lens and a retail awareness lens. And note this, that big drop in gold, what did that mean? That means the VIX futures is coming down hard. I can look at gold and tell you what the VIX is doing, and I can look at gold and give you an idea as to what Bitcoin will be doing too. You can do exactly the same thing. And now note what the Aussie dollar is doing. It's just exploding upwards, and note what Bitcoin is doing, that blue line, it's exploding up with it. Also, get a concept on what copper is doing. It's also exploding upwards. Now, a lot of people will look into the news. The news today was that India is attacking Pakistan. Potential for another war. If you look at the news, you're going to run terrified and screaming and hide under your bed. Now, if you're into that stuff, absolutely go for it. But the concept is, it's really hard to make money from underneath your bed, and that's where the mainstream media news headlines will have you live. Of course, reading the news is realistically quite important. I don't want you to be ignorant of what is going on, but I just want to explain that after many, many decades inside financial markets, structure is the thing that rules. When looking at row 3, which is the S&P 500, the Dow, the Nasdaq, and the Russell, one thing that we must do is to look from a structural perspective. Looking structurally is incredibly important. And when we look from a structural perspective at the S&P 500, notice how the VIX had a level, and the VIX had a level here and here. We're seeing the same things inside the S&P 500. And that's not surprising at all, because the S&P 500 and the VIX hang out together in an inverse relationship. Because the S&P 500 was coming into all of this structural support, we would anticipate a bounce, especially as it sold down so hard. This is why keeping an eye on the futures is a really good idea, because the S&P 500, this chart, is the chart of the backbone of the market, absolutely. And the slower chart is the futures. Now, I mean slower because it doesn't cover the same ground in terms of time frames. But it's a really, really good signal. The other one to look at is, of course, the Russell 2000. Now, why is the Russell 2000 a good one to look at? It's primarily because the Russell is very, very risk sensitive. And you can see all of this underpinning structure. As the VIX was just topping out, we saw all of this underpinning structure on the S&P 500 and the Russell, and I won't pop on these indicators. They're available through the service. If you want to look later, you can pick them up there. But the idea is, as it came through here, we would understand, appreciate, and stack the probabilities for an upward bounce. Now, what has that got to do with Bitcoin? That's a really good question, and I appreciate you asking that one, because what we see is this directional correlation. The ups and downs mirror each other from the S&P 500 futures, the Nasdaq, the Russell futures, the Dow futures, and of course there are other indices which just coincide as well. But when you see the S&P 500, note that Bitcoin took off before the S&P 500 futures took off. That is not by accident. Bitcoin is superb at smelling out risk on and risk off behavior. Now, what does this mean and how do you use it? If Bitcoin is selling down and not confirming a rally in the major stock market indices, it may not be real. But what we've seen is a confirmation between the futures and Bitcoin. This is good stuff. And we've also seen confirmation throughout the structure of these different charts. For example, the VIX, the Aussie dollar, the S&P 500, the Russell. And the more charts you look at from a structural perspective, getting a direction is one thing, but it realistically won't help you that much. This will just set up a very quick introduction to stacking probabilities. But you know that structure is the dominant force inside market. Structural support is where price rebounds. Structural resistance is where price rebounds as well. You must know your structure. Looking at row 4, which is Apple, Microsoft, Tesla, and Nvidia. What you can see, that blue line there, that is Bitcoin. Look how Apple and Bitcoin are moving in directional correlation. And this is not the fact that when, for example, when Bitcoin comes down, we expect Apple to come down. When Bitcoin comes down, we expect Tesla to come down. When Bitcoin comes down, we expect Nvidia to come down. When Bitcoin comes down, we expect Microsoft to also come down. Why? Because the major market indices are coming down with Bitcoin. Why? Because Bitcoin sniffs out It is the best risk-on, risk-off indicator in existence. If you're inside the stock market and you're disregarding Bitcoin, you're doing so at your profit's peril. Please look after your profit. Therefore, it becomes really important to keep your eye on row 5, which is total crypto market cap, Bitcoin, and Ethereum. MicroStrategy is best covered in row 4. One of the things that we've seen recently, all the moving averages were converging, and people get, well, especially retail, they get very excited by moving averages. Moving averages applied to exponential price action, that's not a real good idea. But it doesn't stop people doing it. Now, what we need to understand is where the structure exists inside total crypto market cap and especially Bitcoin. It gives us so much insight into what's happening inside market momentum. Now, one thing that you can see here, total crypto market cap lost its structure around that $2.92 trillion mark, but it had a lot of structure at that 2.87. So as soon as it loses, we expect negative structural attraction, or NSA, to lower structural support levels, and that's actually what we've seen. One thing that we note, as the S&P 500 came into structural support, the Russell 2000 came into structural support, and we saw confirmation of the VIX coming into resistance and also junk bonds just backing off its recent structural overhead. The Aussie dollar starting to go for it, oil starting to go for it as well. Remember, oil means economic activity. We've seen a follow through in Bitcoin, and of course inside the futures, the row 3 references. You can take advantage of these particular moves, but only if you pay moderate attention to the news. The news will always freak you out in the worst possible ways. When the price is at the peak, everybody will be talking about it, and that's not the time to get in. That's the time to be cautious. But when everybody is out of the market and everybody's saying, oh, I've lost, yeah, I'm out, I'm not looking at it again, that's the time you need to be in. Everything is opposite to what you would anticipate. And the big problem is the fear that comes with just putting money into the market. People are told, Warren Buffett says, thou should not loseth moneyeth. It's like rule number 1, and it's rule number 2 is see rule number 1. Sorry, Warren, that's absolute rubbish. When it comes to getting into the market, we must buy on red, like Warren does. He actually does that, but he just doesn't talk about it. What do you think all that cash hoard is about? Warren will get back into the market when appropriate, and that's when things have bled out. He's not going to try to buy the bottom. He's just going to try and buy value. That's all about Warren, but we're much more interested in trading. Now, we were talking about the number of push-ups. If a guy just comes along and says, oh, with great intensity, I'm going to do 1,000 push-ups just in one day, and then I'm going to take the rest of the year off. And another guy comes along, steady, reliable, whatever that guy's name is, and he said, no, I'm going to do 10 a day, and I'm going to do it every day, every year, time in, year out. Who does more? Well, of course, 10 a day. Now, how does it relate to the stock market, and how does it relate to crypto? Everybody wants 100x. That's like doing 1,000 push-ups in a day. 100x's are really tough to get. And what about the 10 a day? That's the people who go after the small percentages, just accumulating just percentage on percentage on percentage. Now, why is that important, and how could that work? Well, it's just like the push-up example. For example, if you had $10,000 and you made 1%, just say you made 1% per day, you would end up with a 3,688% return. You would turn $10,000 into $378,000. But what if it was a little bit more? What if it was, say, 1.5%? What would that turn it into? Well, that's pretty good. That's nearly 2.3 million. That's 1.5% per day. Now, don't forget, that's on average. What you might find is you might do really well one day, maybe 5%, and the other day, maybe nothing, and then the next day, maybe 2.3. You got the idea. But if you're actually doing these small percentages, you get your X's whilst everybody else is hoping and praying. You're actually doing it. This is another retail myth. There's so many myths in retail, it's just crazy. And that's why I go into retail trade perfection and I try to just destroy the myth inside week 1. And there's a lot of other really good stuff in there. And then in week 4, you have to keep the money that you make. It's one thing to make money. Anybody can make money. Keeping it is really tricky. And you need to be able to keep the money. To do that, you got to just escape the success traps. There's a whole lot to it, but it's covered in week 4. I'm going to offer a number of partial scholarships into the Profiting from CTKS Method Structure course, so if you're interested, please directly message me on LinkedIn. No other platform, just LinkedIn. Okay, when we look at crypto directional assessment, this is another template from the Profiting course. In fact, everything I've shown you is available from the Profiting course. What you see is when Bitcoin comes up, it will drag every single alt up with it. If it continues up, they're going to continue up. If Bitcoin comes down, they're going to come down. It's as simple as that. And a lot of people get freaked out. Well, Ken, where is it going? Is it coming up? Is it going down? The answer is always the same. Look at the structure. The structure is like the fences on the wild animals of the financial markets. Yes, those animal spirits are contained within structure. You've probably wondered why some particular price charts can go up and others have less forward momentum. For example, when we're looking at row 6, which is Litecoin, Bitcoin Cash, Binance Coin, and Ethereum Classic, you'll notice that Bitcoin Cash has this particular structure, whereas Litecoin has a stronger structure. Now, why is this caused? Why does this come about? It's always the same thing. It's always structure. So when you look at this, we had a level of structure that was playing in right here. You can see that structural level at 84.21. So it hit structure, backed off, consolidated, and it's up to the next level of structure. On Bitcoin Cash, when we look at that structure, it was weaker because it had so many sellers just actioning and pushing it down. It will take time for you to understand how intercorrelation, interconnection of structure works, but when you get it, you can apply it to any price chart in exactly the same way. So we can see that row 6 is confirming what we see inside the markets at the current time. This is really important. This is a confirmation signal. And getting into row 7, which is ADA, Cardano, Solana, XRP, and Doge, we can see on ADA there was so much underpinning structure here. If you trust the structure, you're going to do really well. And because we had so much structural support, think S&P 500, think the Russell, think Bitcoin, think total crypto market cap, you're stacking probabilities. What you're seeing is that following of ADA and Bitcoin and total crypto market cap and the major market indices. You're looking at charts just like a pro. And look at Solana. Solana is starting to come into overhead structural resistance. That's what's causing this back off at the current time. Doge is also coming into overhead structural resistance. XRP is looking a little better. And notice this basing action right here, as opposed to Solana coming in, tapping it, and going. This basing action. You can see so many things when you look at structure. It is a real eye-opener. I hope this has given you a bit of insight in how to look at the markets from a completely professional perspective. When you do so, you'll find that everything changes. Your perspective on the market changes, everything changes. If you're looking for a partial scholarship to the Profiting from CTKS Method Structure course, please directly message me on LinkedIn. You'll find it is absolutely incredible. It is a game changer. There's so many things in here that you just absolutely require. It doesn't matter if you're an investor or a trader, you need both. You need to master the capability to get in and out of the market. And literally in week 3, you look over my shoulder in a very, very negative market as I churn and burn different trades. I give you a lot of insight into the thought processes where you can lean in and do really, really well. And don't forget, you must keep what you get. If you just blow it as soon as you get it, that's not going to do anything. That will not make you more of a financial blessing to yourself and those you love. You must keep it. When people are new to trading and investing, what actually occurs is that losses cause guilt, sadness, shame, worry, regret, anger, and blame. Learning fixes it. To veterans who have been inside the market, losses mean something else totally different. Losses mean market permission was not granted, and knowledge was deficient in some way, either emotionally or intercorrelation, interconnection, and structure. The more that you're inside financial markets, the more you move away from all of this stuff into learning. Learning is your superpower, and it's the only path to consistent profitability. And it actually does matter where you get the learning from. If you get the learning from retail people who are just teaching as they learn, you're in trouble because they don't know the rules necessarily of the market. It takes a great deal of expertise and experience. I would suggest decades and decades of experience, not 5 months, 6 months, under 10 years. It takes a really long time because you must disconnect the emotional side of the equation. That's not easy to do. And also, just getting away from that retail rubbish about everybody's in competition and you're competing in a gladiatorial match with the person across from you. You're not competing or anything like that. What typically happens, or what actually happens, markets are big pooling devices for money. And who gets paid? The people who know. Who gets not paid? Who takes losses? Who does the market take money from? The people who don't know and don't control their emotions. That's it. That's as simple as the market gets. But only institutional grade thinkers will tell you that. That's why you must move away from scarcity, or scar-city, as I like to talk about it. There's nothing but scars. There's nothing but desolation. There's nothing but just attacking everybody and everything. That's a terrible place to live. That's like trying to get rest on broken glass and barbed wire. Doesn't make for a very good bed. So every day, instead, we show kindness, integrity, and gratitude. To some people, showing kindness is a weakness, integrity is a weakness, and gratitude, what the heck is that? These things are literally the source of continuous happiness throughout your life. Everybody says, I want to be happy, but they do the exact opposite of the things that will make them happy in the first place. I truly believe that financial markets are the ultimate form of self-development. And it's important to put strength into consideration here. Life pullbacks will give you the strength for the next life rally. And if you're going through a life pullback at the moment, our love and healing thoughts are with you. You're not alone, and things will get better. The sun will come out again. Just staying dedicated and committed, understanding that you either win or learn, and never blame. Blaming just ceases anything up here, and it stops learning, and the stopping of learning is the problem. You must either learn or win, and typically after you've learned, you will start winning. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.